era, into the middle of the trading day, and the tone right now is steady but very headline-driven. The big themes are AI infrastructure, healthcare innovation, and a fresh round of questions about consumer and retirement finances. Let's bring some clarity to the chaos at midday. Since the last hour, the AI complex remains a core story, but with a twist toward balance sheets. According to Emily Berry at MarketWatch, CoreWeave and Nebius shares are rebounding after getting punished on debt concerns. A Seaport analyst is openly asking whether those debt fears were overdone, especially with Micron's strongly driven earnings lifting sentiment across the group. Traders are treating this as a real log-time check on how far they want to lean into high-growth, high-leverage AI infrastructure names. The rebound is constructive, but the underlying question about funding heavy capex remains front and center. On the healthcare side, there's a fresh jolt in the weight loss drug race. Jamie Lee reports that Eli Lilly and Novo Nordisk have now filed competing next-generation obesity drugs with the FDA. Drugs that could be potential game changers versus their existing blockbuster brands like Wegovy and Zepbound. Professionals will be watching not just the stocks themselves, but the ripple effects across everything from healthcare services and insurers to food, beverage, and fitness names that have already seen demand expectations reset by the first wave of GLP-1 drugs. Another pocket of strength and scrutiny is in the regulatory and consumer finance arena. Arathi Swaminathan at MarketWatch highlights proposed changes from the Trump administration that could roll back parts of a rule that has, since the 1970s, barred lenders from requiring a male cosigner on a woman's loan. Consumer advocates are calling the proposals alarming and a step backwards. For markets, any shift in lending standards and discrimination rules can influence how banks manage risk, how regulators respond, and ultimately how credit flows to different groups. It's not moving the indices right now, but it's something financial sector analysts will be parsing closely. In the sleepers column, there are a couple of names and themes traders are quietly flagging. William Gavin writes that Uber's stock is trading near historically cheap levels by some measures, while investors remain worried about robotaxis and self-driving technology as long-term threats. Bernstein analysts argue the market may be overestimating that risk, particularly if autonomous vehicle tech ends up widely licensed rather than wholly owned. Whether you agree or not, it's a good example of where sentiment and long-term disruption fears can drive a big gap between narrative and valuation. Retail and consumer loyalty is another under-featured radar story. Jenna Contino spotlights 6 store loyalty programs that experts say genuinely put the customer first, instead of just harvesting data. For investors, these kinds of programs can be quiet drivers of higher lifetime value and stickier revenue streams. So pros will often watch how effectively retailers translate loyalty perks into traffic and margin, especially heading into year-end shopping. And zooming out to household finances and retirement, there's a cluster of pieces from Beth Pinsker, Charles Passy, and Alessandra Melito around annuities and 401ks, giving money to adult children while you're still alive, and the growing generational divide over Social Security fixes. Those are more personal finance stories than trading catalysts, but they feed into the broader picture of how people may seek guaranteed income, how they transfer wealth, and how voters might respond to entitlement reform, all of which matter for longer-term demand in insurance, asset management, and bond markets. Into the next hour, I'll be watching whether the rebound in CoreWeave and Nebius continues as a durable vote of confidence in levered AI infrastructure, how the market starts to handicap this new obesity drug race between Lilly and Novo, and whether any of these consumer and retirement headlines start to show up in sector-level moves, rather than just in the news flow. And later today, we'll recap which of these stories actually stuck through the close in our end of day wrap. I'm Grant Mercer, and this is Storm Stock Solutions. Remember, this is information and education, not personalized financial advice. As always, I'll be here to keep clarity through the chaos of these markets. On behalf of Storm Stock Solutions, I'm Grant Mercer. Stay sharp, stay steady.